The title of our August macro note is Disease, Data, and Destiny. It's really inspired by the fact that we've been combing day by day over the case counts and the rapidly changing landscape of regulatory openings and closures in cities around the world. We thought we'd try to get some historic perspective on the epidemic. We found that over the centuries, epidemics have impacted the way that cities evolve and the way that people interact with each other, as well as with the built environment. That famous 1854 map of London by John Snow, it helped identify sources of cholera, but it also led to changes in how the water and waste system of London was designed. The famous Haussmann Plan for Paris, or Olmsted's Central Park in New York City, even the Shanghai Customs Harbor Quarantine Station. These were all 19th century responses to infectious diseases. Going even further, British historians explained that the sharp reduction in the labor force after the Black Death in the 1350s, well, it boosted survivors' wage bargaining power with employers. Their rising income gains were then spent on better quality ale and food in a growing batch of public houses that gave rise to today's British pub culture. Given pubs' ubiquitous role in British life, the change has clearly been an important part, both culturally and real estate-wise, in terms of how British towns and cities grew. The sobering result, the bars and pubs along Clark Quay in Singapore or Lan Kwai Fong in Hong Kong or even Rush Street here in Chicago, they're all in a similar state of partial or complete closure.
What we have done is turn to more high-frequency sources of data to help us paint a more timely picture of what economic activity looks like. And using these data sources, we can see that travel to workplaces and retail locations continues to rise. Restaurant reservations and airplane travel also seem to be trending upwards, even as second quarter GDP figures are reported, showing a very sharp contraction in output. Another important source of information that we can use that is somewhat more real-time comes from public markets. Real estate trusts and companies traded on listed exchanges uncover some important insights for private equity real estate as well as real estate debt. As they trade in real time, they provide real-time pricing, and these securities swiftly reflect changes in the underlying health of occupier markets as well as the risk premium required by investors to hold these assets. Global REIT valuations swung from trading at a healthy premium to private markets pre-pandemic to now trading at a discount. While this discount has narrowed somewhat over recent months, that pricing gap is still wider than it has been over recent decades. And given the importance of transactional evidence to private market valuations, particularly in times of high uncertainty, this dislocation between public and private markets is likely to persist for some time. And this disconnect opens up a window for investors to exploit this discrepancy between public and private market pricing. Public markets can also give us a steer as to how investors are assessing the relative risks and opportunities across sectors. The sector hierarchy in REIT pricing broadly coincides with the uncertainty around each sector's prospects that we allude to again in Chapter 3 of the mid-year ISA. Retail and office REITs are trading at a wider discount than they have typically done, and industrial and residential REITs are trading at a healthy premium.